Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week we're covering avoiding the e-pay requirement, which may apply to a taxpayer if they combine estimate payments and exceed the threshold. For an update on everything that happened during the year and tax planning for 2024, register for Spidell's 2023-2024 Federal and California Tax Update webinar. A list of available dates is at caltax.com under webinars. In 2020, when taxpayers were given until July 15th to make their first and second quarter estimates due to the COVID-19 pandemic, many taxpayers made those payments as one single payment. But the FTB did not grant automatic waivers to the mandatory e-pay requirement for these taxpayers. In 2023, taxpayers in 55 counties were granted a filing and payment postponement to October 16th due to severe storms. And this means up to 4 estimated tax payments are postponed until October 16th, 2023, so combined payments will be an issue for even more taxpayers this year. All payments made by an individual or corporation, regardless of taxable year or amount, have to be remitted electronically to the FTB after the individual either has made a single estimated tax or extension payment greater than $20,000 or filed an original return with a tax liability greater than $80,000. If the total of the estimated tax payments made with one check or one e-payment is greater than $20,000, the taxpayer will have to make all future payments to the FTB electronically. If a client's payments will total more than $20,000, split the payments up to avoid being subject to the e-pay mandate going forward. There's no requirement that these payments be made on separate days. However, it may be wise to make several payments across several days, because if a taxpayer makes back-to-back payments to the same payee on the same day, the bank may reject or put a hold on the payments, assuming that they're fraudulent. An individual taxpayer who is required to remit electronic payments but remits payments by another means is subject to a penalty of 1% of the amount paid unless the failure to remit electronically was for reasonable cause and not willful neglect. The penalty is 10% for corporations. The penalty applies even if the amount remitted is less than $20,000, but the taxpayer was otherwise required to make payments via EFT. If a client does combine their payments and becomes subject to the e-pay mandate, they can request a reasonable cause abatement of the penalty and also seek a waiver from the requirement going forward. A taxpayer required to remit electronic payments may have those requirements waived if the FTB determines that the amounts paid in excess of the threshold amounts were not representative of the taxpayer's tax liability. A taxpayer may be able to argue that 4 combined payments is not representative of what they would normally pay, but making separate payments is likely preferable to jumping through the hoops of requesting abatement and/or a waiver. If a waiver is received, the requirement to make or not make future electronic payments is subject to the terms of the waiver. For individuals, request the relief or a waiver using Form FTB 4107, Mandatory e-pay Program Election to Discontinue or Waiver Request. Corporations request e-payment waivers by filing Form 3816, Electronic Funds Transfer Election to Discontinue or Waiver Request. Stay up to date with California tax changes with a subscription to Spidell's California Tax Letter, a monthly publication written by California tax pros. Check out a list of benefits and subscribe at caltax.com under publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.